This week, we've seen Bitcoin bouncing back from the recent weakness, while Ethereum was failing to keep up with its rivals' pace. Also, there have been some major regulatory moves as well as changes in the Bitcoin mining sector. Let's dive into the latest trends in the crypto market with GoMining. Over the past 7 days, the price of Bitcoin has been fluctuating between $60,380 and $66,517, currently resting just 10% away from its March all-time high. The upswing in the original cryptocurrency's value occurred following the release of the latest US Consumer Price Index or CPI report, showing core inflation at a 3-year low. People are getting their hopes up over expectations that the Federal Reserve might soon lower interest rates, thus opening the floodgates for liquidity to flow into alternative assets, crypto included. Reflecting this optimism, there has been a surge in requests to recover access to stranded Bitcoin wallets. For example, Germany-based ReWallet reported a 334% increase in requests last quarter, setting a record high in early March when Bitcoin prices peaked. The firm estimates that about 20% of the total Bitcoin in circulation is likely inactive. Similarly, US-based Wallet Recovery Services saw a 30% rise in requests so far this year. While Bitcoin is bouncing back, Ethereum isn't seeing the same kind of action. It appears that the second largest cryptocurrency by market cap is experiencing a bit of uncertainty as market participants await a decision from the Securities and Exchange Commission or SEC on May 23rd whether to approve VanEck's Spot Ethereum ETF. In a significant step forward on the regulatory front, the Senate has passed HJ Res 109, a bill previously supported by the House to overturn the SEC's Staff Accounting Bulletin Number 121, which restricts financial institutions from keeping Bitcoin and other cryptocurrencies in their custody. With a strong show of unity, lawmakers sent their approval signal loud and clear, hitting a tally mark of 60 yes votes against 38 no votes. Up ahead lies its final hurdle. Now it heads to President Biden, who has threatened to veto it. There is no doubt SAB 121 is a barrier to the growing demand for Bitcoin services, and overturning it is essential to reducing centralization-related risks. However, if the US president says no, it'll take a whopping 2/3 majority in both chambers to override it. Highly regulated traditional banks will step into the crypto world to offer their custody services for Bitcoin and other cryptocurrencies. In turn, this would elevate crypto's credibility and attract a wave of new investors. Meanwhile, the House Committee on Rules is set to look at the Financial Innovation and Technology for the 21st Century Act, potentially bringing it to a floor vote later in May. The potential passage of this U.S. bill is crucial. It gives the Commodity Futures Trading Commission, or CFTC, new jurisdiction over digital goods and clarifies the SEC's jurisdiction over digital assets offered under an investment treaty. Among the latest Bitcoin mining developments, Oklahoma has passed a new bill that establishes legal protections and a regulatory framework for cryptocurrency miners. Thanks to new regulations, crypto mining efforts are safeguarded under state law now. For crypto mining worldwide, this could be a catalyst for other regions to embrace similar frameworks. In the meantime, El Salvador keeps pushing forward, having mined around 470 Bitcoins since 2021 using a geothermal power plant fueled by the country's Tecapa volcano, according to the official data from the country's Bitcoin office. As of today, El Salvador holds 5,752 Bitcoins. On the flip side, analysis from Kaiko Research shows Bitcoin miners are grappling with lower profits due to reduced transaction fees. According to it, after a temporary spike post-halving, fees have decreased, increasing the financial pressure on miners. If miners start to sell off their Bitcoin to cover their operational costs, it might affect market prices. As some major mining companies hold significant amounts of Bitcoin, any forced sales could have notable effects on the crypto market. Also, during the summer, trading activity and liquidity is often lukewarm, adding to these difficulties. Even so, this appears to be a temporary situation. So that's all we have for this one. Make sure to like the video and subscribe for more content just like this. Till next time.